Amara Raja batteries because that stock has been charged up per se. It's doubled so far on a YTD basis, and its other pure, even Exide, has managed to show a gain of around 80%. There's a latest announcement of another tie-up coming in from Amara Raja, but the big question is, if you've missed out on the rally so far, is it good even for a fresh buy?
Anisha, good morning. Well, I think this is going to be a story for most of the mid-cap stocks. That if you missed out something, probably the valuations are going to be far more expensive. And that's what the case here as well. I think the stock has already done the run-up, in my viewpoint. Maybe I think the fundamentals are not doubted at this point of time. The growth and the prospects are also not doubted. But the fact remains that I think we are already scaled up on the valuation. So there is nothing which is called at this point of time a clear headroom available from the point of view of the investors buying the momentum. Maybe I think for buying the deep value investment opportunity, we will have to see a correction in the market. If at all it comes, that would be a good opportunity to buy into. But otherwise, I maintain that I think, yeah, the fundamental is not doubted. The current valuations are not comforting.
Okay, fair enough. Those will be newsmakers in today's trade. But what's that sense that you're getting, Deven, when it comes to some of those large cap private banks? Today, Bernstein, for instance, has a note on HDFC Bank. They're talking about targets of 2100 and it's an outperform rating. And these large caps have been in a slumber for quite some time. There was that little bit of a pickup. Are you sensing that this is long term in nature?
Yes, I think it would be extremely important to understand that the kind of growth that we are talking about in the economy, some of the larger banks will have to participate and participate big time. In my viewpoint, I think likes of SBI, likes of HDFC banks, I think they would be the ones who would probably have the majority of the role to play. If at all, I think one has to put a narrative out there in a sense that I think you are likely to see the size of the balance sheet doubling in next 4 years time for I think the size of companies like SBI or for that matter HDFC. To me, I think the fabric looks absolutely well set for growth. On one side, you have the corporate book is expanding. On other side, the SME, MSME book is also expanding. And at the same time, the smaller, the retail segment also is performing well, along with the balanced portfolio with the prime sector lending in agriculture and related activities. So all in all, put together, if you see HDFC Bank and the current valuations that we are experiencing, probably my take is that I think downside risk in the stock is absolutely minimal. And as a result of which, I think you could see significantly large upside. If I always maintain, if I think this bank is basically lacking in the creating the digital presence as much as it should, I think if that particular deficiency is overcome, then in my viewpoint, there is no looking back. Probably, I think you will see the newer highs going forward in coming period.
Okay, so that's about some of these private banking names. Yes, been in a slumber, but let's see when they shake out of that. But what's the view, Devin, on Zomato? Because clearly the financials coming in from Swiggy, and it does look like while Swiggy has, of course, managed to improve its own performance, but Zomato is far ahead.
Yes, indeed. I think within portfolio of Zomato today, while I think you also have the quick commerce available with you in form of Blinkit, and at the same time now taking the plunge into the another area of activity, which is the entertainment segment of the ticketing and all, which is also coinciding with the existing business model that they have. So I think what is the beauty part of this particular company's business is that having acquired the customer, they are creating enough amount of hooks to retain those customers into the business of the company. And that's where the presence of Blinkit, that's where the presence of PTM's entertainment business that they are talking about, that is basically going to play a role. So in my viewpoint, I think the business should be looking up better. Fortunately, I think they are not bleeding. Fortunately, they are making cash money. So that is a good sign. But valuation wise, everything probably is factored in at this point of time. Maybe if the market gives further rally, that would be even more expensive. But otherwise, I think the business condition outlook looks, I think, pretty much good as far as the making the money is concerned from the operations.
Even in the run up to the election, which is one sub-sector you would be bullish on? For example, HFC, agri, defense, which is one sub-sector you would be bullish on?
Nikunj, I think it's going to be a little challenging to spell out any one thing at this point of time. Also because of the fact that election definitely means a lot, but the budget definitely means a lot. But the fact is that already I think the interim budget has laid down the complete roadmap as far as the economic growth and allocations are concerned. So to my mind, I think if this budget, full budget is coming in, data is going to support what they have already communicated in the month of February in 24. So from that perspective, not many things are likely to change. But we remain distinctly bullish about the possibilities in the construction space, and that is where I think the building material space is one area where we remain distinctly bullish about. Whether we look at the cement per se or whether we look at, I think, any other derivatives, including the ceramics and others. But larger amount of confidence stays with the businesses which are cable, the companies like, I think, your uh, uh, left, and then their particular businesses I think are looking at relatively more stronger going forward. So from that perspective, I think we remain confident about the building material space as a whole, along with the housing business activity which the government is likely to promote in a big way.
I'm going to just shift gears and talk about real estate stocks. And once again, good.
Where is it that you stand, Deven, when it comes to the entire, overall FMCG space? We've been talking about that little flare-up that we witnessed during the election time, little bit short-lived in nature. Is the long-term trajectory looking promising?
Aman, I think with the economy nominal growth, I think at around 11.5% or 12%. And along with that, I think the disposable income growing for the individuals. I would think that this combination is going to continue to experience better and better numbers going forward. So from that particular perspective, if you look at the FMCG companies would remain distinctly positive. And the best part is that many of these companies are actually, including the likes of HUL, they have actually started using the predictive order generations or the demand generations using the digital framework. And that's where I think one is remaining a little bit more optimistic about that. On one side, you have created a distribution reach in tier two, tier three, and beyond. And at the same time, you are also having the ability to predict the demand in different pockets. So, as a result of which, two advantages. On one side, you are expanding the business, I think, into the rural areas. On the other side, I think you're protecting the margins because I think instead of producing those products which are not sellable, you're selling only those products which are sellable, which in turn generates better revenue and margin. At the same time, I think lower inventory. So all in all put together, I think on one side the balance sheet condition remains stronger. On the other side, I think the distribution reach remains extremely healthy. So from that perspective, likes of HUL, likes of Nestle, or even Britannia for that matter, they remain relatively stronger candidates for to remain in the portfolio.
Okay, there you have it. Meantime,
Percent higher for Garden Reach. I mean, just look at the gains what some of these stocks have seen. Then I'll shift focus and talk about a sector which was like the Rara sector of 2023, but now is on a back foot. Some of these niche consumer companies which went public, Campus Shoes, Vedant Fashions. We don't talk about it. Page Industries. Page Industries did not go public soon. It went public like a couple of years ago. But is there trade in some of these niche consumer brands which really were the talking point of 2022 and 23?
So I think what has changed in this particular period, and that is what is more impressive out here. The likes of Reliance Retail has actually, I think, changed the way in which the retail segment, particularly e-commerce segment, particularly has, I think, started progressing. Under each of the verticals, be it electronic verticals, which remains, I think, the largest one for them, to the smallest in margin, particularly is grocery. I think, if at all, I think you look at, I think, each of these verticals under which they are operating, I believe that the complete business has to be seen little differently. On one side, what they are telling us is that they have got the proper supply chain mechanics in place. which is giving them in-time delivery and at the same time better amount of margin. On the other side, I think they have got a complete fulfillment system into place, which is including the payments and the lending of money to the merchants. So as a result of which, I think the more surety is on the on the generating of the higher revenue coming from this particular area of activity. Plus, on the top of it, I think some of these activities also result into higher amount of captive brands, like own brands, which is giving you the better margin as could be seen in the last quarter result. So yes, I think the consumer-facing businesses definitely I think it means something. But within that, I think who is selling smartly? I think that is where probably your eye should be, and that's where I believe that the likes of Reliance Retail, though it's part of Reliance Industries, it's not a separate company, could be I think a differentiator going forward as far as the business outlook is concerned in this area of activity.
All right, thanks so much, Deven, for joining in and sharing with us your views as well as individual newsmakers. Those are the pre-open rates as well.
If you like this video, then like, share and subscribe to ET Now.